Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the dollar has pulled back a bit. Actually, now we've got the euro that's come right into some key resistance. This 1771, it's struggling a bit from this area right here. Got this marked off here in the euro dollar. You can clearly see it here on the 2-hour chart. We actually made a nice little rebound as we dipped lower, cleaned out some stops, and worked a little bit higher. And we seem to run out of the gas right here at this key 1771 area here. We're going to move this out of the way. And we'll take a look at as far as what we have for economic data coming in today. It looks like it's going to be a fairly light calendar. Canadian wholesale trade, Dallas Manufacturing Business Index, that's going to be at 10:30 Eastern. So it's going to be a fairly light calendar today. Let's go on and pull this down. Coming tomorrow, wholesale prices for Germany. Same thing, fairly light here in the States. We do have Richmond Fed Index, and we'll also have Dallas Services Index. Those come one after the other. The manufacturing and then the Services Index the following day. And of course, we're going to have FOMC. Let's move this out of the way. And gold's just holding steady here, really here at this key trend line that we had broken right here. Not on a short-term basis. It's a key trend line on a very short-term basis, but key nonetheless. And let's go on and take a look at where we stand here on the news. Canadian dollar gains for the second week as inflation data boosted rate hike bets. The Canadian dollar edged lower against its U.S. counterpart on Friday, but was on track to gain for the second straight week as data showed a pickup in underlying inflation. I thought the inflation data was pretty robust, said Amos Ahoto, director at Clarity FX in San Francisco. The Bank of Canada has raised interest rates 4 times since July of 2017. Chances of another hike in October rose to nearly 90%. Still, the United States is getting very, very close to having one move forward on its trade deal with Mexico without Canada. White House Economic Advisor Kevin Hassert said Canada sends 75% of its exports to the U.S., so its economy could be hurt if a delay is not reached. The dollar index rose against a basket of currencies as fears that Britain would leave the European Union without a trade deal pressured sterling, and we'll get to that. Sterling rebounds on the Brexit hopes, but Tory conference keeps investors wary. The British pound bounced 0.5% to above 131 on Monday after a big sell-off in the previous session, helped by comments from Britain's secretary that a deal with the European Union was still possible. Sterling tumbled 2 cents against the dollar on Friday, its biggest daily drop this year, after Prime Minister Theresa May said Brexit talks with the EU had reached an impasse and called for new proposals. Brexit Secretary Dominic Raab said he was confident that the United Kingdom will make progress and eventually clinch a Brexit deal. And the aggressive stance from the EU 27 after Salzburg and the subsequent backlash from Theresa May increases probability that confrontation builds to the Conservative Party conference at the end of next week. Deutsche Bank currency strategist George Sarvilos wrote in a note. An imminent agreement in the Brexit negotiations cannot be expected, said Esther Maria Reichelt, under the assumption that current levels on the option market still provide good opportunities for hedging against further turbulence. And finally, the dollar snaps a losing streak as the pound bounces. The dollar edged higher on Monday, snapping a 2-week losing streak as investors bought the greenback before a widely expected interest rate hike by U.S. central bank this week. The dollar has struggled as trade wars concerns faded and emerging market central banks led by Turkey took aggressive steps to stabilize their market. With the Federal Reserve set to increase rates by a quarter point for the 8th time since late 2015, we typically see this brief window before a U.S. rate meeting when hedge funds buy the dollar, and the trade war headlines are also aggravating that trend. The euro held at 17.45 on some relief from German Chancellor Angela Merkel's ruling coalition resolved a dispute over the country's scandal-tainted spy master on Sunday and a threat to the 6-month-old government. The pound was the biggest gainer against the dollar in early London trading, with the British currency rising 0.5% against the dollar above 131. And gold firms as the dollar after China halts trade talks. Investors will focus on Sino-U.S. trade tensions after China canceled mid-level talks with the United States as a well-proposed visit to Washington by Vice Premier Liu He, originally scheduled this week. The news out of China does seem to be having some negative impact on gold, with the dollar cautiously higher and gold a bit lower by extension. The moves are relatively tepid because much of what is happening was telegraphed earlier and is already priced in to some degree. Last week, China added 60 billion of U.S. products to its import tariff lifts. Although gold is generally considered to be a safe haven, the months-long trade rift between Washington and Beijing has prompted investors to buy the dollar in the belief that the U.S. has less to lose from the trade war dispute. Gold traditionally trades poorly ahead of an anticipated Fed hike in dollar and will have an upper ground, said Stephen Innes. And with that, we'll go on and move into the bias chart. Give you a moment. There we go. Okay, let's go and get started and take a look here at the euro. Euro's at a key area here, this 1771. Now, we did go in and back away. If we go and take a quick overview from this last week, we'd actually made it up to the 38%, and the euro stalled. It looked like possibly we would make a run beyond that at that point, but we saw some dollar buying come in, and that slowed the market. And this is a key area. This 1782 is at 38% of the move down here from 1302 all the way up to the move from where the market run out of gas, which was 25.53. Very key area. We started to slide back here in the euro, and this one we finally got a chance to break out and look like we would add further to those gains. I think when the pound started slipping poorly, that really took the wind out of the sails for some further gains on Friday. It opened the door for this market to go on and pair back it did to this same area you can see here of support. And what they did this morning, they just took out the stops just below here and then turn around and pop right back up. Well, this is that key area here, 1771. if the market can get beyond this, and this is what they were mentioned here in the stories, that generally we'll see the dollar bought into the FOMC. I'll tell you what, each time you think they're going to be a little bit, maybe a little bit light on the rhetoric, they don't ever seem to be light on the rhetoric after all. And we end up going and, buying the dollar, or the dollar ends up getting bought initially into that phase. We see as the FOMC, the rhetoric comes out a little bit stronger than I'm always looking for, but I think that's how the market's figuring that's the way it's going to be. So we had a little bit of a relief rally here in the euro. So you would have thought, okay, well, it's not that far away. We may see the euro run out of gas right here in this area, the 1771. One of the things that we're looking at, we mentioned in the analysis, 1771 is key. A rotation back would actually take us back towards 1707. Now, when they opened up in the Sunday session, they actually opened up a bit on the defensive and stayed relatively quiet here. Now, we saw in the news in Germany, they kind of straightened out that Spygate scandal. That gave an excuse for the market to turn around and goose some stops. And we did come up to the 1771 here. And this is a little bit of a tough area. We got just above it where you see the market expect to go on, maybe run out of gas here, and maybe going into FOMC with that premise that the Fed will still be resolute. Then you may go on and see the euro back down from here. Because if you get past this area, and we'll pull this further out, really opens the door potentially for this move here to 1838. Initially, there'd be a quick pause. We'd probably hit some stops, take it to 1815, but really the door opens up here for 1838 as the next, key area to go in and jump at. So that may be a bit of a tall order ahead of the FOMC. Hence, if you're looking to go in and fade this against the FOMC, we're going to break down here, maybe make a run down here to the 1707, but we'll have to get above 1761. The market's going to get 1771 on a 2-hour close. The market's going to have to prove it can get beyond this 1771 to open the door. And it's key because we'd be taking out this 38% area. We may not get a long ways ahead of it. We certainly did here, but that would be the target would actually be the next full run up would be 1838 with a pause at 1815. But you'd be looking at this 2-hour close here. This was our level here, and this is what we're talking about, that 1815. Well, for right now, we're going to play it right where it's at right now, which is 1771, because that's our key level for right now, 1771, and that's on a 2-hour close. 2-hour close. When we look here as far as support, we've already come down here and found support. Support, if we do rotate lower, is actually going to come all the way down here to 1707. Right here. There might be a couple of pit stops down here. We've already come down here and taking out some stops. If we were to break from here, start to wind down, this is what we're going to eventually get to as 1707. That would be the real support. Okay, and let's go on and move into cable now. Now the wheels really came off the caboose here in cable, but one of the areas I was looking for when as we were moving lower, I think it was really coming under some kind of pressure on Friday was a move down to 30.56, and that's exactly where it went to. Eventually it broke to right to the pip. It stabilized a little bit, but it wasn't as if we had a good strong bounce. I mean, we just hung there for the most part. Now we've pushed a little bit higher. Let's take a look here on a fib here on the 2-hour chart to see where we stand. 38% comes in right there at 31.49. And I think after the run that we've had, you probably have some traders thinking, well, you know what? I don't want to be the last one to buy, and maybe I bought a little bit late. Okay, so really any move back, they're probably going to be used as shorting opportunities, thinking, well, maybe the market has gotten a little bit ahead of itself. Well, 31.66 is fairly key. You can see that coming across all these touches. And let's get a little bit closer look. There's 31.68. 31.49 is going to be the 38%. This is a key right in here, 31.49, but this is, let's pull this in just a bit closer. Right there, 31.62. So that'll allow them to overshoot that 49-ish area. So let's look at 30. It's going to be 31 right there. You see that coming across these tops? So it's going to be 31.62. That's just beyond this 38% of 31.49. So it's going to be 31.62. Give it a little bit of room to the upside. And as far as support, on a very short-term basis right there, 38, right there, 30.87. If they make it all the way down here to 30.56, which is where they stopped at, you really have the, I want to say the opportunity, but the risk that this can really hit some stops. And the market will try and push it for all it's got. So in the meantime, if we do pair back for today, that's going to be your support, 30.87. Now, we've already had a pretty good downfall here in the cable. So this is unlike the euro where support, I think, would be somewhat lower because we've already taken a dip lower here. If we break that, this is where they would be targeting, this 1707. Anyone that's looking for on the short side, if it breaks above it, you know, we can, but we'd be getting past this 38%, and you'd be doing this and all this work and getting it beyond 18, just going into the FOMC. So the play would be that a lot of the FOMC was already priced in, but what we've seen here in the latest meetings is the rhetoric still is, for the most part, pretty tough. So the market may have a tough time trying to establish a move above 18. Hence why we think there's a risk more to the downside. So when we look here with the cable, after this sharp fallback, really the market will be looking back, although I think the any opportunities where we rally up in here, the market uses an opportunity to get light on any longs or maybe establish some shorts. On a short-term basis, that's where the resistance or support is going to come in, 30.87. And let's take a look at the Aussie, man. This has had a fantastic run here with the odd. Finally made it past their 72.55, but we've been keeping the 73.20 as an area where they could potentially get to be the next key target. We haven't quite made it up there, but the Antipodean currencies have reacted very, very well in light of all the light of the Chinese tariff bit with the U.S. And China saying it's canceled its meeting. Despite all that, we're diverging higher. So if we do see a bit of a dollar pullback, this is where they're going to go. They would go to. Now, seeing a dollar pullback might be a bit of a stretch, as I said, going into the FOMC. But if we do go on and get a push, this is where they would go to, 73.20. That's what we had for our resistance. We're going to go on and retain that. And as far as support, after the fall that the odds had, and now it's starting to react, I don't want to say favorably, but it's starting to diverge positively from all the negative news. Again, it's gotten tired of just going lower. So I think any dips will be supported if the dollar comes in weaker. It's actually going to come in right there, 72.20. I think that's any dips back. We could push a little bit lower, but this is where you're going to start seeing some support come in, I believe. Let's call that 72.19. I think we had 72. Okay, we're a little bit supportive here, so we're going to move this down to 72.20. Actually, said 72.19. And really, this is just on the idea that you see some dollar strength going into the FOMC. So where would the market likely come in? Where could they initially push to? As I said, they could move a little bit lower, but I think you're going to start to see some nice buying coming in right at that 72.19 area. Right here, you can see it coming across the top. That's where I think you'll start to see buyers start to step in. Anyone who sells the market is not going to be, I don't believe, on a short-term basis, be looking for a big move. They'll use an opportunity in that area to go on and cover a good portion of their shorts. We'll go on and take a look now with the Kiwi. A nice rebound we've had the Kiwi. Now the Kiwi's been in the dirt in the basement for quite some time. It's not as strong as the Aussie is in regards to diverging from these lows, but it's holding its own. It started to work, continue to work higher. And for our buy chart resistance, we had it right here, 67.05. The market did go on and make it up here. I think it was almost at that 67.05 when we looked on Friday, and you can see it made it right there at 66.99, 67. We're going to go and keep the 67.05. Market's still holding its own, but on the pullback, same thing. I was looking for the market to go on and defend that. You've got this level coming right across here. Will actually allow for, because it hasn't diverges positively as the Aussie, we'll give it some room. You know, should we see some dollar strength going into the FOMC, we'll give it some room. So this is right where we see the support coming in, right there. You see that coming across these touches just below this key level. So right there, 66.14, 66.14. Same thing, you want to get an idea of where your risk is with the idea that we come into the FOMC, you more than likely see some dollar strength. Sometimes you come in the Monday before, that's where we're at, the Monday before, a couple of days before FOMC, you may see a counter move, which we're seeing right now, even with the euro. But sometimes those do kind of run a little bit out of steam. And as we move in towards the FOMC, I've seen some of these moves then start to pull into dollar strength coming in that same morning. So although I think we can certainly go on and move higher, I think the market might have a tough time trying to establish a higher move, going into the teeth of FOMC. For today, you know what, we might try and push these markets a little bit, see what they're made of. But this 2-hour close on 1771 would be key right here. Cable holding its own just a hair below this 38%. Let's now go in and take a look at the dollar CAD. And after a pretty good torrential fall from this 132, we really haven't seen much of a recovery other than this one little blip here. Yeah, let's get rid of this. Obviously, tied into the whole NAFTA business and the risks there. It is just about made it to the 38%. If we're going to go and see some dollar strength, where would that go and take us? Well, let's go and take a look at a fib. There's a 3015 right here. And that's the same level what they hit previously. You can see that. We're going to go with that for our resistance. If we do get, depending on we get some NAFTA news and also the idea of where could this possibly go to? It's fairly oversold, but where did it possibly go to on a little bit of a squeeze? Well, I'm going to go with just the technicals, and that's going to be 30.15 to 38%. Once again, you want to go and allow, or at least if you, let's say you take any shorts, the market's already been pummeled pretty bad. You want to know where the risk is, and certainly you can see where we popped up this last time. Well, that's going to coincide actually with the 38%, and that was after we made even further lows. So I like that 30.15 here as our resistance. So we have a good idea of where the risk is ahead of the FOMC. It might be a little bit tough to go and break beyond that. For right now, we're going to go, I'll show you, we have this support. Like it's fairly oversold. And I think traders are thinking they probably don't want to push it too low ahead of FOMC. So coming right across these touches, that's going to be our support. 29.14. So I think any dips in that area, you probably find some willing buyers here. And that buying be short covering. And let's go and take a look here with the Swissy. We've almost made it down here to the 61%. This Swissy is in a world of hurt. But we do have a little bit of a hammer bottom. Looking here on the daily. So the support here that we've got, potentially all the way down here, 95.33, but the market's trying to pick itself up. That would be support here. And this market is really taking a beating. It's going to be 95.67 in case they take out these lows here. That's where they would target here. 95.67. Resistance will come right here, right there. 96.27. 96.27. It's going to be resistance. And let's go and move into the dollar yen. The dollar yen was the one that I wasn't a believer in the dollar yen because it kept diverging. To me, it wasn't. It should have been a whole lot higher. Well, we're starting to resolve ourselves higher, and we certainly have moved beyond that 1166. The 1279 has been a key area here. We ease back a bit, but we have to go and give it its due. It's still holding here. We do have U.S. rates are still up in the stars. Got to update these. Some of these markets, I updated my charts over the weekend, and for whatever reason, some of these rolled back to September and instead of where they were December. So there were some changes made I didn't even realize on these, but I noticed on some of my charts they didn't update correctly. But let's go on and move in here to the dollar yen. Right there is going to be the resistance 1284. 1284. And we have that already marked off. And for whatever reason, I don't know, it just didn't save my, because I know I had already adjusted this to mark this level here at 1284. And I don't know why I didn't save those charts when I rebooted and reset my computer and did some maintenance work over the weekend. But the dollar yen continues, as I said, holding its own here. I think where the bonds are, actually it should be a whole heck of a lot higher, but it's not. As far as support, I'm do right here at 1211. There we go. And let's go and move into the cash dollar index. We were looking for a move, lower last week. That did come to fruition. I did update this chart. Like I told you, is over the weekend I did some maintenance work, and for whatever reason, I don't know why, some of these other chartings here has got the September. I don't even know why it's done that, but I have to go in and update this. But one of the things that we're looking at here, and the reason I mentioned that because I did update this, and actually when I opened up my charts, these updated charts were missing and these updated levels, so I had to redo those. But getting back here, we were actually looking for a move to not, our overall target is 92.80-ish, we said that, with an intermediate target, pause, 93.72. Well, the market almost made it there before it found some support, but that was going to be our intermediate target. So we did make it down here to 93.80, which when I look on here, actually on the daily, seeing all this stuff is not even supposed to be there. That's what I'm saying, it didn't update correctly. But you can see where they found support. If you look on the daily, that was a key area here, this 93.89. And I had 72 on the 2-hour chart. But why it's a good idea to go in and look at different time levels. But I had noticed this obviously later. But yeah, that 72 almost made it to 72. We found a little bit of a bounce from that area. Let's go and move back into the 2-hour chart. So we've broken back in here now. What we're looking at, our resistance comes in here at 94.68. Now we had, minor resistance here. This is where your resistance comes in. A 2-hour close above 95 would negate this whole downside action right here. Now 95.32 was the one that was going to kill everything off, but in the immediate time, if we get above 95, that's going to call into question, where the market may not want to go and make the move lower. Longer term, I'll be bullish the dollar because there's a whole ton of support down here. But in the short term, it's 94.68. 94.68 is going to be our resistance. A ways away from that right now. And the support now, well, if we break this area, 72 is not going to provide much support at all. So where would we target? I think this is where we would go to initially, 93.46, if we end up breaking this area. So we'll see how this still plays. My thinking is still we'll eventually go and make a move down here to 92.80-ish. But for right now, ahead of the FOMC, This 94.68, once again, on a 2-hour close, on the closing basis, can we poke above it? Sure, man, if we get, once again, a hawkish FOMC, we can make a jump up here, but it's a closing basis, and the 94.68 level is going to be key. And let's go and now move into the gold market. Let's take a look at this from a daily perspective right now. Gold is still managing to hold, at least for right now, above that 1197. But we're mired in this zone. It's a decent sized zone, but you can see we're going nowhere fast. This 1191 to 1216, we're just kind of back and forth in it here. And even since then, now it's even just up and down like a yo-yo. Certainly, like I said, we're as I put it on the analysis, we've got more of a downside bent here because you do a little bit more work to get up to the upside, but it doesn't take nothing to go in and slide right back down. And that's pretty much the way it's been. And obviously going into the FOMC, the concerns with how hawkish they may be, rates have been the one thing that have kind of kept the gold market in check. It's, as we mentioned last week, it's been positively diverging from the dollar. But with U.S. rates remaining at these higher levels, that's keeping the gold held closer to these lows. But I will say this, it's still holding above that key area of the 1197 so far on the 2-hour close. So we see that on the daily basis, this market is just mired in just a bit of a mud hole, not able to get any kind of traction to break higher. I think it wants to break higher, but for right now, there's nothing at this point, any catalyst to go and push this market. The only thing would be is if the Fed comes in not as hawkish, they're certainly not going to come in dovish, then you could probably get gold to start to move higher. And then what would propel it beyond that, then if subsequently, then if the dollar were to start to slide on, let's say, a less hawkish Fed, somewhat more than anticipated, if you want to call it that, then not only would gold get a boost from, you get a rally in bonds, but then a subsequent slide in the dollar would give gold the juice to get beyond this 1216, which would be key, would be very key. So let's go and move into the 2-hour and see how we stack up there. Well, this is the trend line that we had in place. And we actually broke below this trend line, but we did hold above the 97. Remember coming in from Thursday, I was saying, at the time I said we were at the precipice of support. We had the horizontal support at 97, which was very key, and the trend line support, both intersecting at 97. It was important the market hold it. It did, and we saw a pretty good rally, but we turned around, slid, and gave it all back rather quickly. We took a stab below 97, jumped back up, and then we just went up and down on Friday with a downside bias. Right now, my take is that, well, the market's in a defensive posture at this point because now that we're trying to reclaim this trend line, but and it is a very short-term trend line. But once again, each time the market ventures up into these mid-teens, we seem to lose our momentum and slide back. So right now, the gold market's not a defensive posture going into the FOMC. If the rhetoric coming out of the FOMC is not as hawkish or maybe construed that way, we might be able to see a little bit of a bounce from here. One thing we do know is the bond market is very, very oversold. That would be the first key to seeing this gold move higher. And then if we were to get a subsequent slide in the dollar, if the Fed's rhetoric were to be construed as not as hawkish, then we could go in and get a little bit further move, and that may be what would give us a catalyst to go beyond this area here. For right now, though, really, the way this market has given up its gains, you see how quickly it slides right back down. I don't believe that resistance doesn't even come in. This would probably be resistance here, 1211. And the reason being is I think there's further resistance here at 06, you can look at 08, but where is it really? I mean, the market has just, we may hit some stops to push up higher, but where is the market going to get interested in saying, no, you're not going to go beyond that? I'd have to say it'd be right here at 1211. There's good resistance before then, but and when the way I look at resistance is in the sense that if it takes it out, it materially changes the tone of the market. And the way the market's been acting, I don't see anything materially changing the tone. You can look at 1206 here. There's some good resistance. Maybe we go up then, the market turns back. You can look at the daily breakout at 1208. But if we reclaim 1206, does it materially change the tone of the market? No. We reclaim 1208 in a daily close. Does it change materially the tone of the market? No. So to me, I believe it would have to be up to 1211. If we got above 1211 on a 2-hour close, then it would go a long ways in negating a lot of this downside. Plus, we'd be reclaiming with some good distance that trend line. So to me, the daily resistance is going to be 1211. Not because I think it's so bullish, but because I think that the market can move higher, and by the next morning you could be $5 or $6 lower from 1208, or if not even further. So we're going to move it here for 1211. Support here for the gold market, it's got to be this 1197. It's all about 1197 right here. And we break that 1197 to our close, is going to open the door for a move $10 lower, 1187.50. So all about 1197. I think in the meantime, it's just we're going to go on and be just back and forth in it. Let's go move into the bonds. This market has been deathly weak. I did, as I mentioned to you, I did had our daily chart and had that updated, but I don't know what happened. You see, even that's missing. So some of these charts got lost in the update. I'm not sure what happened there, but let's take a look here. We talked about that. I did have that 40-25 being key coming across. This 40-25 goes all the way back even further, and that's why this chart's not even updated correctly. So I remember showing this going all the way back to, it's just like 40-22, all the way down to 2009. Now you can overshoot a market. You think about this. This market's going back. We're going back years and years. So You can stay down here. We're only 20 pips or 17 pips away from that key support. How much further? There is a little. We bid lows 39. Really, that's really even a good area there. That 39.27. Let's pull this a little bit closer. We bid those 39.22. Let's look on the 2-hour. And that's going to be support right there. 39.29. 39.29 for support. Well, that's what our support was right there. 39.29. Let's go and take a look on the upside for resistance. We had 40.20, and the market made it up to what, 40.22. It's going to be right there at 40.21 for right now. 40.21 for resistance, which is just one tick above where we had it previously. And take a look at the bulls. Now, the bulls have been all over the place themselves, but on a very short-term basis, that's going to be support right there. 58.73. 58.73 here on the buns. And let's take a look for resistance. $59.02 right here. $59.02 coming across here on the buns. That'll be resistance for today. And that was resistance from Friday. And let's go into the DAX. Now, we've talked about a good rebound that we've already had here in the DAX. It's going to be right there, 12,396. 12,396 for resistance. They've already taken a stab at it this morning at 12,396. You can see here, right in the close of this body here, as you see there, that's going to be resistance. It actually came up probably about a tick short maybe, or maybe right on it. So it's going to be 12.96 for resistance here on the DAX. right here. 12,312. 12,312 is going to be the support. 12,312 right there on the DAX. There's 2 ticks above where we had support for Friday. And there's the bias chart for this morning for today's trading. Taking a quick overview again, key level here for the euro is going to be this 2-hour close above 1771. When we take a look where we were Friday, with the move, the breakout move that we finally gotten, the follow through on the euro, it certainly looked like we had the potential to push higher. Potentially looked like we could make it up to about 1815, and really I thought we might even push even higher. And there was 161%. That's why I'm frustrated that some of these charts didn't get saved, because I did some chart work from before, but we even had 161% up in here. And but I think that what happened with the cable, that really took the wind out of any sales here for the euro to move higher at the time. And this happened to coincide also where we had the 38%. Hence, we started to slide back. But as I mentioned, resistance comes in at 1771 on a 2-hour basis. So if we get above that, we'll goose some stops and really opens the door for us to challenge. Now, it'd be hard to believe that we'll push well beyond with the FOMC coming, but watch this. This is going to be key, this 2-hour level. One only thing that this morning that we did do as we slid, we stepped down here, took out the stops into the 20, and then opened the door for this move to go higher. So you'll probably have some people that are long. They're saying, look, I've already, we've already taken the stops down here. Now this opens the door for us to move higher. Let's see what it's worth. If we, work lower, then I can bail out and look to get target 1707. So watch this. This is going to be important, this 1771. What they could end up doing is maybe going much higher, taking out the stops on the upside, and then set themselves up for a move lower going into FOMC. But keep an eye on the 1771. That's going to be key. Looking here at cable. Cable's now above the 38%, but our resistance, remember, is coming in at 3162. And right there, you see that? Coming across this closing right here. That's what I'm looking at. So it's 3162. The 50% comes in at 3172. So you can see here, at least for the moment, the 38% has not been able to hold the market. There's a little bit of a pause, but we're asserting ourselves. So that if the 38% doesn't hold, it's the 50% you're looking at. But also we have this 3168. But for starters, this 3162 looks pretty steady here for the cable. But once again, you shouldn't be too surprised, because we had such a fierce downside move that for this market to pop up a little bit shouldn't be too surprising. Although I think that after this fierce downside move, probably has some people thinking, you know what, maybe the cable has gotten a little bit ahead of itself, and they will use any opportunities to get out of any longs or put on some shorts, because I'll tell you what, you're in pretty good shape here when you consider how far the cable is run. I would think you'll find a lot of selling activity at the 3172. I mean, apologize, 3177. Now our resistance here, our bias chart support comes in 3162, and the 68 is key. But if they can pop up and goose some stops, I think you would see a plethora of sellers there. With that, we're just almost at the top of the hour, and I think Dale may be back with us. So we're all looking forward to that. Gold moving a little bit higher here, 1204, but it's got some work to do. That's saying is we broke this trend line, and certainly the defensive posture. I believe that we'd have to get a 2-hour close above 1211 to reclaim, put some distance between the broken trend line and reclaim that upside bias. It's still holding overall as long as it doesn't take out 1197 on 2-hour close. But Dale should be stepping in it now.